Sure. Just real quick, you can all hear me, yes? I
Yes,
see
great.
Michael. Give me a thumbs up. All right, cool. Um, Thanks, Michael. 3BBI is, as Steve described it, right? It's third-party payment initiation. The idea is a lot of people want the user interface for a payment, right? We want to send a transaction. But running a bank turns out quite difficult, and requires quite a few different licenses and all sorts of very, very fancy things. And so the idea is that a third party, such as a fintech or someone like Apple Pay or Google Pay, wants this idea of linking a bank account with an actual financial service provider, and being able to initiate the payment from that account. So it's sort of the idea of somebody who's not really a bank gives you an interface, allows you to link your actual bank account, who might not have the right interface. Not every bank wants to build a mobile app. Some of them might just have a web app, and that's kind of it. So you're allowed to link the bank account, and then you would go to process a payment, which basically you could use the interface of this fintech, and the money is actually going through the traditional channels. It might not be Mojaloop or any kind of real-time payment system. It might actually be executed using a bank wire or a variety of different ways. If it's an on-us transaction, it could be just a book transaction that goes inside the same bank. But from the user's perspective, they're using the bank as the source of funds and managing the ledger, moving the actual money around, the nuts and bolts. But the interface and the thing that the user actually interacts with is the fintech or the payment initiator. And so it's a really powerful thing because it allows innovation on the user experience. It allows innovation on all kinds of other really interesting vectors, while still allowing the banks to be the ones that own and control your money, and that ultimately are responsible for making sure that fraudulent transactions don't happen. They deal with things like KYC and AML requirements that are mandated by the various countries. And it separates the concept of I hold and manage your money from I provide you an interface with which you can interact with your money. And that's why I think it's so important. I think Steve mentioned the crazy number of transactions you see in India. What he didn't mention is that the graph, he mentioned this whole doubling over time. But he didn't mention that the graph before that, when you just had IMPS, which was the sort of early lower layer of what UPI sits on top of, that did not support third-party payment initiation, the growth rate was a lot lower. It was much, much slower. And enabling third parties to interact, it wasn't just like Google Pay is active in India, but there's lots of others like PhonePe and friends. And by allowing the third parties to actually do stuff, it gave people the ability to interact with their money the way that they wanted to. There were also other factors that contributed to this, like Aadhaar and the identification system for India. But the ability for third parties to do stuff was what we think, based on the numbers and the dates, it's either an insane coincidence or third parties really were a big part of the engine for growth. And so third-party initiation is one of those really cool things that seems simple and kind of almost boring. Turns out it's not when you get into the API services and all of the weird edge cases that pop up. But it sounds simple and boring, and it turns out to be a really huge driver of growth, and that's why we're so fascinated by it.
Thanks, JJ. I think, and I agree. I think that you brought up a great point on IMPS, and unfortunately, hopefully, Nayland will be joining us soon, and he'll talk about this. But IMPS, when we think about what an instant payment service is, IMPS was launched in 2011. A lot of the countries that we're seeing launching IPSs now are actually launching something that looks a lot like IMPS, what India's had for 10 years. They've been on a great journey to get to where they are with UPI. We think it's important that that's something that countries should learn from and hopefully not take the journey that they've taken, just shortcut it right to what they've built with UPI. And that's what we're hoping we can bring with 3PPI. JJ, I have a question for you. I mean, when we think about the 3PPI experience, particularly in e-commerce, it is very often like I go to the e-commerce website, I've linked my account to whatever e-commerce website it is, like Amazon, for example, and I can just with one click initiate a transaction, and Amazon is allowed to initiate a transaction from my account. I can do one-click checkout theoretically using that. But as a consumer who's used to using Amazon with my credit card, why is that different? Like, I just feel like, cool, you just made it so I have the same thing with Amazon as I've always had. Why is 3PPI different when you're talking about when we're talking about Mojo, we're talking about real-time instant payments versus the credit card experience? Because as a consumer, it feels the same to me.
Yeah, that's a good thing. I think that's one of those. Well, that's kind of the point. And so third-party initiation is really more of a thing that happens under the hood. So the way you described it is really, that's a good thing, right? You want people to just click and pay. That's kind of our goal. The difference is one of, I think primarily one of security. One of the fundamental things of the BMGF level 1 principles, and one of the fundamental tenets of Mojaloop and what we think makes for good real-time payment systems, is push-only payments. What that means is no one can go into your account and yank money out. And that might sound simple, but it's actually a really, really important thing. Anyone who's had to dispute a charge with a credit card ever knows that, yeah, it's really good that push only is a thing for all these payment systems. Because without it, and especially when we're talking about dealing with financial services for the poor, pull payments can be crippling if abused. And what we've seen is that does happen from time to time. So yeah, you go to Amazon, you check out. It seems the same. Under the hood, it's very fundamentally different. You're going in and authorizing a payment with a credit card. Basically, you're giving permission for Amazon to take your money. And you kind of trust that they won't take too much. And you hope that they don't take too much. If they do, you get on the support channel and you argue with them, and maybe they give it back, maybe they don't. If they don't, you have to call your credit card company and get them to dispute the charge. It's a whole thing. With a push payment, you're actively giving your bank and you're instructing your bank to please send this money to the recipient. It might seem the same, but that's a big fundamental difference, because you're actively taking money from your own account and pushing it to the recipient, as opposed to entering your credit card and allowing the recipient to go and yank money out of your account. This makes for a big difference in fraudulent transaction rates and things like that. And that might seem like, oh, well, it's more convenient for you. It's more like a debit card. Okay, sure. And you might be thinking, oh, well, fraud in that case is really bad. Well, it provides more predictability. I think we also talked a lot about one of the, in the level 1 principles from BMGF, about predictable and irrevocable payments. And so I mentioned push payments only, but also irrevocable is a big thing as well. Because if you're thinking from the perspective of you, the consumer, you're trying to buy something on Amazon, well, yeah, you know that you're always pushing money, and Amazon's reputable, so they're not going to yank money that they shouldn't out of your account, and everybody's pretty on the up and up. But under the hood, also, you have to think from the perspective of the merchant. The merchant in a credit card world has to deal with the fact that occasionally someone's going to enter a credit card, they're going to pull money from it, and it's going to end up being disputed later, and Amazon's going to be out that money. And they kind of budget for this and think about the fraud and dispute rates. And those things cost money. They cost reputational money. There's also fees that the card companies charge, all kinds of things like this. And that's really difficult for an economy that's trying to figure out how to grow. Having variability in whether or not you're actually going to get paid as a merchant is a pretty big deal. And so having the predictability of, I guarantee once you receive this money, you're getting this money. It is yours. The person has pushed that money to you. You don't worry about later they might claw it back because you clawed it incorrectly from them. And again, it sounds simple, but reducing the variability on whether you actually get to keep your money, combined with the fact of users not having to worry about maybe the wrong amount will be taken, you have this more predictable, stable platform on both sides of a transaction. The person sending the money is sending it of their own volition. They're very certain about it. They've authorized themselves through a variety of channels. In third-party initiation, we require two-factor auth. It's either over SMS OTP, or in Mojaloop's case, SMS OTP, or via a FIDO credential, which is even more secure. And on the recipient side, you know that the money is yours. There is no debate about whether or not somebody stole your identity. I mean, yes, if your phone is stolen, bad things can happen. But at that point, you still need, in many cases, a fingerprint if you're using FIDO. So I think these two fundamental pieces here are really, really important for why it might seem the same, but under the hood, it's very, very different. And I would argue if we're really trying to drive more commerce in countries that are not necessarily credit card heavy, that's a big thing. I'd also point out that this opens the door for mobile wallets to initiate payments. Not everybody has a credit card number. Not everybody wants to ride on the Visa rails and pay the 2.9% as a merchant to receive credit cards. And that can be a problem as well. With third-party initiation, anybody who's able to store value, so that's mobile wallet providers, that's traditional financial service providers, and anybody in between who's capable of storing a balance of funds, is able to use a third-party initiator to send that money. You don't have to say, oh, do you accept Visa, MasterCard, whatever. It's just, are you on these rails? Are you running Mojaloop? Are you running another popular real-time payment system that has integration with these third-party initiators? Problem solved. So it makes a big difference for, I would argue the main thing is this idea of predictability and accessibility across different service providers, banks, mobile wallets, and things like that, as well as on both for the payer and the payee. People sending the money and receiving the money have a lot more of a stable foundation, just that you come to expect from real-time payment rails.
Okay, next, I think you brought up a couple of points, I think, throughout this that I want to point to as this is the business day. One is banks. If you're a bank, a lot of banks are trying to compete with the experience of mobile money providers and frankly can't in a lot of places. And so the idea of, if you're a bank, where would you like someone to keep their money? In a wallet that's not in your bank, or in your bank, and allow others to enable that experience. Your money just needs to be useful where you sit it. So if you're a bank and you're arguing against 3PPI, or you're not dramatically advocating for 3PPI to be brought into your country, then you potentially losing out on customers to those that are more than happy to take deposits away from your customers. So I think the business model for banks there is quite clear once they can take a look at it and understand it. So hopefully, thank you so much for helping us understand what that is. And then also mobile wallets that can actually be could be a third-party initiator, which is also a new role for them to think about. But in the end, I can say my GPay India app looks very much like a Tigo Pay app. It's just that where the money sits in my bank account versus the money sits in my wallet. But very often it's a very similar experience. So yes, that would be great. And the fact that they get that additional functionality, like we've talked about, of different, potentially more similar to a credit card, more similar to a pull transaction, without actually the risk and the cost to the system of a pull transaction. So thank you for pointing all of that out. Do you want to check in real quick before we keep moving on? Did we get anyone else joining the panel? No. Okay.
One. All right.
So one more question for you, JJ, since we still have some time. I mean, one of the things I think you've been a part of these conversations. We've been discussing the idea of direct debit for a long time. And it comes up very often from the market of, cool, I love this whole thing of push payments. I get it. I kind of get what you mean of it should be push only. However, we still want to have direct debit. And we keep hearing it over and over again. We keep saying we need to come up with a solution for it. Give us your thoughts. Do you think 3PPI is going to be the response for IPS systems for the market demand of a direct debit type of function?
So this is actually really complicated and can get to be a very heated discussion. It is a fundamental thing that people want. We see this all the time. I have a gym membership. I have my taxes to be paid. I have my light bill to be paid. I want it to be paid. I don't want to be annoyed every time it needs to be paid, especially if it's happening more frequently than once a month. We've seen some good results in certain places, certain markets in particular. So I live in Singapore, and there is a system called Gyro, G-I-R-O, where you basically authorize a pull payment within limits at a certain cadence. So what that means is Singapore says, hey, you owe this money in taxes. How about we take a certain amount every month for the next 12 months? We'll take it on such and such a day, and you grant us authorization to do so. It's a fixed amount. It's on a fixed time schedule. A lot of people here really like it. That's how I pay my taxes. In other countries, we're seeing more variable stuff. So Gyro also supports variable things. I use it for my internet service provider bill, where I say up to X amount per month can be taken out once per month. It's a common thing. Australia has a similar thing with NPP. They call them mandates. All of these are important things. I think that in my mind, the decision is not quite made up, and I'm not entirely convinced that third-party initiators are going to be the fundamental fix for what we're trying to do here. I think third-party initiation is really important, but in our current design, it still requires individual authorization for each payment. We would have to adjust those APIs in something such as Mojaloop to support something more flexible than that. Things like, oh, you're allowed to take up to a certain amount, up to a certain frequency. In my mind, like I mentioned before, I'm not convinced that this is just a thing we should do. I'm very wary of pull payments. Miller and I have had quite a few discussions and debates about this, and he is slowly winning me over to his side of not supporting pull in any form. Michael and I have had quite a few discussions on this as well, of how we would do this if it needs to be done. I think that the business use case for it is very, very serious. We do have a lot of need, and it is a good thing in general. The problem is when you have a recurring payment on your credit card and someone continues to charge it beyond the cadence that you agreed to, you have your credit card company in the middle to solve the problem for you. In a real-time payment system with irrevocable payments, you do not have that. And so that's why I say I don't think that it's fully decided yet. Hypothetically, if we were to all agree, like, yes, this is the greatest thing ever, I think that a good place to do this might be in the third-party initiator world, where you still have to do some form of authorization at some sort of cadence. Maybe you grant authorization for your third-party provider to actually be the authorizer of the request. But I think that it's up in the air. So there's a lot more debate that needs to happen.
All right, JJ, I would really like to have had that debate, and I wish you were here so we could have that in person. Michael and Miller and I hopefully will have it during a break.
Out there.
Questions, and we need to keep moving, unfortunately. Unfortunately, what we now have Nalan Bansal on the call with us. So I do want to have a few conversations. So we're gonna keep this panel going for a few more minutes, so that we can have a chance to hear directly from Nalan on a few things. And I promise we'll make up for it in a little bit. So thank you, JJ, and very insightful as always. All right. And first, I'd like to thank Nalan for joining us today, and happy Diwali. And we hope we can get through this very quickly and get you back to your family and back to your vacation. So thank you again for joining us. I will very quickly introduce Nalan. He, like I mentioned at the beginning, he is the Chief of Corporate and FinTech Relationships and Key Initiatives at NPCI. And he actually comes from a world that I think a lot of us would very much appreciate. Worked with Bharti Airtel for quite some time, worked in MasterCard, so a lot of experience with payments and how pull payments work and the card system works, and is now responsible for a lot of the innovative products that are being driven on UPI, including bill payment. Let's see. There's a whole list of innovations that Bansal is responsible for. I'll let him go through which ones he thinks are important. But I think particularly on bill payment, it ties into what JJ was just talking around. How do we enable bill payments on a pull system? And Bansal, I'm not going to ask you to answer that question for us. Before you joined, we did talk about the massive growth that UPI has had over the past couple of years, and how amazing that has been. That the whole world is watching what you guys are doing. And this panel is obviously about third-party payment initiation, and we think that's a major driver. As JJ said, it could just be a coincidence that the growth started when 3PPI was introduced, but probably not. But I would like if you could spend a couple minutes talking about from your perspective, the story of that tremendous UPI growth. What are some of the drivers that you've seen? Some of the ones we may not have seen. I think we've all read a lot of reports. There are different people that say there's 10 or 20 different things that have happened that have gotten you to where you are. What do you think are kind of the 3 or 4, maybe 5 big innovations, big things, decisions that were made that have driven the kind of growth at UPI that we've seen? So Bansal, I'll pass it over to you.
Yeah, thank you, folks. It feels I'm already jumping into a live debate, but I hope I'm not too late. Sort of going back to the question that you were asking. I don't think I have an answer to that question in a very prescriptive manner. I think this has been a 7-year journey. A lot of things have happened. Some internal, some external, some that we hoped and it happened, and some we hoped and didn't happen. But I was going through the paper that you folks have written down, and I mean, there is no doubt in anybody's mind that a multi-party system where there is a financial service provider, there is there's a PISP player, and so on and so forth. There could be various models to it. Is eventually the way how payments have evolved in the country, and is likely to evolve even globally is what we believe, which is why we're also looking at UPI as a standard in most of the corridors where we believe Indians are relevant. Now, to answer very specifically, I think the first thing that helped is that people started investing in payments. The pre-UPI world was more of an obligation. The only place where there was a little bit of investment that was happening was on credit cards, because there's a large chunk of credit income to be made, credit-based income to be made in those transactions. But in general, banks across the globe haven't invested in payments to the extent that they should have. Be it real-time payment systems, be it settlement systems, recon system, customer dispute systems. Till today on card transaction, if I have to raise a dispute, I have to wait for 90 days, 60 days, and then run it over like 180 days, 6 months to be able to settle that dispute. Even if I'm right, I believe I'm right. So I think the real growth happened when organizations stood up and said, I'm a payment organization and I'm going to focus on payments. And of course, the first thing that they start doing is bill payments. I was hearing some thoughts on bill payments from JJ, and I fully agree. That's the first and the core most, I would say, use case of the payments that is something that sticks to the payment ecosystem. And therefore, it is no surprise that when we launched UPI way back in 2015-16 time period, we also launched what is known as Bharat Bill Payment System, BBPS, to be able to drive that use case in the ecosystem. So the early players, I think, so two things. One, organizations reorganizing themselves, some of them saying, yes, I want to set up a payment organization, not a bank, not a NBFC, not a credit lending XYZ, but I'm a payment organization. Secondly, looking at sticky use cases like bill payments to start with. Now, while that started, the architecture, like I said, had to be a 6-party or a 5-party model where there wasn't an expectation from the banks because they were busy doing a lot of other things. For some reason, payment is not their business. Deposit is, and credit lending is. So having third-party app providers, infra providers was an important step to be able to figure out without compromising the security of the and the trust. More importantly, we had to architect and orchestrate it in a way that the consumers are able to rely on the UI UX of a big tech organization, and then eventually connect back to the banking ecosystem in some form. So I think that was the architectural play. Now, right at that moment, I think the first thing that it kicked off for us was the P2P. There's a lot of P2P gamification of payments. People were trying out a lot of things, paying each other, family, friends, splitting bills, making small little bill payments. So I think it was a time of building trust. And I think that's where we most invested our time in. That was 2016, 17, and probably some part of 18. Having built that, I think some of the external factors caused it to be a little bit more, activated than we thought it would be, which was the demonetization phase, which when the currency in the Indian ecosystem was completely taken off, and a fresh new currency segment was brought in. So suddenly, overnight, people did not have cash which is about 80-90% at that point in time, they did not have cash to transact. And they had to look at some mechanisms to make payments. Now, of the 200 million odd merchants, small, big, micro, in the country, only 3 million had POS machines. So you can very well imagine what kind of chaos and mess it kind of was beginning to create. And that's when I think UPI started bringing in a lot of push, where merchants started accepting QR as a form factor to start accepting those payments. So no cash, people could just scan the QR and start making those payments. So from P2P, the P2M revolution started maybe more externally with demonetization. Again, so like I said, then that was again a big period of trust. 2018-19, more and more merchants came on board, and I think a percentage of P2P to P2M steadily grew in the favor of P2M. Today we are 50-50. We used to be 90-10 at some point in time, focused more on P2P. 2 years down the line, 2020, I think when the acceptance infrastructure grew to a point which I would say was almost 20 times of the POS infrastructure, almost 20 times. I think that's when it was kind of more relevant for the ecosystem to have a relook at the cost and the economics of the transaction, and then that's when the transaction became practically free for the merchant, and which again, paired with the pandemic and everything, kind of grew the acceptance both sides, both on the merchant side and on the pay side, or the payer side, and therefore I think so. I would say it's a mix. It's a mix of how some of the external factors have helped, and it's also a scenario of where, as NPCI, we had been able to create a balance between some of the large tech organizations which brought in the right UX, be it Google Pay or Phone Pay and WhatsApp and Amazon and many other Indian startups that some of you may not be aware of, and also the banking ecosystem on how we can bring them on, on board. Now, the biggest, I would say, the tech innovation that came in when banks started opening up the cloud connectivity on these as volumes grew, and then they had to scale up their infra. The cloud connectivity became so important. So while these are bank dominant clouds, but they are at least public infrastructure to some extent, and then allowing these third-party payment applications to be able to set up their small little islands of what you call servers and everything into that cloud to be able to drive high volume, high traffic scenarios. So I think that's the tech side of the story. Of course, consumer side of the story is completely different, but I just wanted to give a view of how things happened for us. Part luck, part hard work, but yeah, that's where we are today.
Thank you, Don. I think there's I think one follow-up, and then I'm going to open up for a couple of questions, then we're going to have to move on. First, a comment, which is that I like the way you described the transition from P2P into P to M. And I think a lot of us saw that, where there was a period of time where you started seeing handwritten phone numbers on merchants, and they were using P2P to accept merchant payments until they decided, okay, this is actually worth it. I want to start becoming an actual QR merchant. Mm-hmm. That was going to happen for a long time. It was about a 6-month period, and then all of a sudden the phone numbers were gone and everybody had a QR. It was impressive. And the next question that I have, though, is there's two big use cases we talk about with the merchant payments and with PISP that we see very often. In Mumbai in particular, let's say that India is very large, but in Mumbai where I see it, there's two big use cases. One is a lot of us who are using it for online transactions. I want my food delivered to my house. I go to Zomato and I use UPI and I use GPay or Amazon Pay to Phone Pay to pay for my delivery of my overpriced food to my overpriced apartment. That is one use of UPI. Another is I go downstairs to my vegetable wala and ask him, and I buy $2 worth of vegetables with a QR that that he has to accept that he's a phone pay merchant or a Paytm acquired merchant or a good GPay acquired merchant. Where are you seeing the biggest growth right now from the Zomato online merchant payments that we're doing, or from the street vendors where we're most interested in the inclusivity aspects of it? But as a business, where are you seeing the growth?
Yeah, no, interesting question. I think the most growth we are seeing is on the physical side. I think you're asking about physical and online. I think the most growth we are seeing is on the physical side, because while I say that, and the numbers are for everybody to see, we are still about 30-35% of cash digital. We are still 60-65% cash economy. And I think the deep penetration, especially places where we don't have smartphones, or people have smartphones and the best they use it for is watching entertainment content, nothing else. I think that is still the difficult segment to crack. These are self-help groups sometimes, and basically marginalized and that's a large number. It's not a small number by any chance. So which is why I think more and more penetration happening in those zones, and therefore the growth is coming in those zones. On the online space, I would say the aggregation and the micro delivery of services is what is causing growth. JJ talked about recurring payments. I think some number puts at recurring payment numbers in India at about 80 million, 80 to 90 million. We believe the market is about 250 million. Out of that, almost 60% is now on UPI auto pay. That's the way to set up mandates. So I think, small value payments that people would like to make, very quickly without having to, read through OTPs and stuff like that. I think those are where we're seeing some growth on the online space. But the larger growth is definitely coming from physical world.
Okay. Thank you, Anand. Unfortunately, we are out of time. I wish we had a lot more time, but I look forward to bringing you in for the next convening and more of our other in between events as we go through this. I think that goes back to one of the things that Phil was talking about previously, of not just what is the impact, but are inclusive IPSs actually more successful? That's one of the things that they're going to be looking at. And I think that question of, are we seeing the growth for small, very small in-person merchant payments for very small, newly included merchants, or are we seeing it in online payments that of people who are already included? And I think you're confirming something we very much hope is true, which is that no, the success of UPI is the success of financial inclusion. And then as we think about next, we're seeing a lot of growth in it. Like I was just at the GFF and saw in Mumbai and saw the amazing investment you were talking about into the NPCI. I'll say the NPCI ecosystem. It's all about lending now. Everyone is talking about how do we lend to those merchants, and it's on the back of the data you're generating for those small merchants. And so that's going to get into the impact that hopefully Phil's going to be measuring. So thank you very much. This is an incredibly exciting story, and we look forward to hearing more about it in the future. Thank you, JJ, for taking us through what PISP is at Mojib. I know it's a very complicated thing for a lot of people to understand. Thank you, UNCDF, for letting me take some of your time. Thank you to the audience, because you're going to get lunch a little bit late because we went over, but I promise I will make up for it. So thank you all, and look forward to seeing you in person very soon.
Thank you, folks.
All right, Paul. New Paul. Okay, I'm going to let you introduce yourself while we get this set up.
Okay.
Get out of your way.
Sure. Good afternoon, everyone. I'm Paul Damocha, working with UNCDF as Digital Finance Advisor, and here to moderate this session on data sovereignty, the cloud. I'll have two gentlemen who will be on this panel and will guide us through this session. UNCDF, specifically in the inclusive digital economies, we promote inclusive digital economies through 4 main pillars. Through innovation, we support a lot of fintech innovation, whether from the regulatory or business or tech perspective. We support digital skills, work around to support digital skills, whether around financial education, digital literacy, and such. We work with or to support infrastructure, open payment systems, which is why this is relevant for us. And of course, to connect all this, we support enabling environment, or especially policies around any of those other 3 areas that I just mentioned, including open payment systems. As we talk about all this movement of data, all these products, goods, services, labor, money, comes with a lot of movement of good, all these transactions. And it's inevitable, of course, to talk about cloud computing and such. And of course, the biggest value add of cloud computing is the very fact that it can provide scale without the MSMEs or the different companies worrying really about the IT infrastructure that goes with it. However, this goes with a lot of data or security considerations. There have been a lot of discussions about what's the security of this data while data is in use, while data is in transit, while data is at rest. And so we look at some of these laws and regulations that affect this movement of data. We'll specifically delve into the issues of data sovereignty, of course, government control, especially around the use of sensitive data. We'll talk about data residency, about talking about the location of data, which is critical for companies because of the commercial tax considerations. And finally, about data localization. Of course, a lot of countries, again, limit data to where it's originated from. And so to discuss this further, please allow me to introduce my panelist, Dr. Nkundwe, the Director General ICTC. Karibu. Karibu sana. And Mr. Mark Ihimoyan from the Director Emerging Markets Engineering at Microsoft, responsible for Africa and the Middle East. Karibu. Yeah, so this is going to be a very quick session. It's going to be a very quick session. I'll give you maybe 2 seconds each to just introduce yourself very quickly and your organizations, what your organizations do. Just 1 minute.
2 seconds. Okay. Am I on?
The mic working?
Is it good? Can you hear me? All right, fantastic. So my name is Mark Ishimoyan. I am the Director of Engineering Core Innovation for Microsoft, global expansion team focused on emerging markets, specifically with a view on Africa and the Middle East. So in my team, we're essentially responsible for thinking about, thoughtful engineering strategies and investments as we expand the Microsoft cloud footprint across, emerging markets. I mean, globally, but in my team, we basically take a view across emerging markets and look at the emerging markets lens, strategies and investments that we need to make to accelerate adoption and drive growth. Thanks. It's a pleasure to be here today and very excited about being a part of this panel. Thank you.
Thank you very much. I'm happy to be part of this panel. My name is Nkundwe Moses Mosaga, like the way I introduced myself before. I'm a Director General of ICT Commission. ICT Commission is vested with 2 functions. Function number 1 is to coordinate the implementation of ICT policy of the country. The function number 2 is to promote ICT. And how we do that? We promote ICT by promoting the professionals. We promote startups. We promote the regions to ensure that there's equitable development in ICT in the country, and also to make Tanzania competitive in the global economy. The discussion that we're having today is very pertinent because most of the economy nowadays, they move to digital economy, and their data is the most important thing. So I'm so excited to be here.
Thank you very much. So I'll just move quickly to the sessions. Of course, this is relevant because it's all in line with open payment systems, real-time open payment systems. And of course, in this sense, as we talk about data sovereignty and all these issues around data, we are financial data. A lot of the financial institutions, fintechs, whether MNOs, banks, affected by a lot of these issues. So to mark what's the meaning of data sovereignty in relation to cloud computing, maybe talk to us a little bit about the global trend with regards to data protection, localization, and sovereignty. I know those are too many questions, but maybe if you can touch a little bit on the status of data protection, especially within East Africa. So I don't know if those are too many, but
no, great. All right, cool. So when you think about data sovereignty in a broad term, right? I mean, it essentially refers to, the laws and the governance structures that, countries put in place to basically manage or control the data that is collected in that area. And it's a very, very pertinent discussion to have, especially with regards to cloud computing, right? To be absolutely clear, I mean, every country has the absolute right to basically determine or control, the flow and how essentially data is managed, or the data that is basically collected within that country is handled, right? And our goal or the overarching aim here is to essentially work to basically make sure that those policies, or we're influencing those policies to make sure that, it's basically being developed from an informed point of view that balances the risks and the risks and the rewards, or the risk and the benefits, and that there's a very healthy compromise between the gives and the gets, and that these policies are not essentially stifling innovation or basically preventing, citizens from basically being a part of the digital economy. So in engaging with stakeholders, right, regarding, data sovereignty and what this entails, we find that there are literally three claims, or they mostly revolve around three claims, right? So first, I'm going to talk about data residency, and then second will be around, lawful access, and of course the third will be around autarky, right? So data residency essentially involves, again, talking about the geographic borders, right, where data resides, right? So it could be data in transit, data in at rest, that's basically where data is stored, or how data basically flows, right? Or it could also be data in use, right? I mean, data is the oil of the digital economy, as we do understand. It's a very important asset, right? So when essentially there are policies, or there are governance structures that are put in place by various countries that essentially determine and say, okay, look, what are the laws we make concerning the data, and where should that data live? How should that data flow? And how can that data be used, right, within the country? Those policies are essentially being put in place, right? And so when you think about data, then we also, there's the data classification aspect of that conversation that also needs to be had, right? Because, you're talking about, okay, what data set are we referring to? Is it, defense and intelligence data, in which case, many countries do have the policy that, that data should not even be on the internet at all. Could it basically refer to financial transactional data, right? Or could it basically refer to personal health records? So data can be classified depending on the sensitivity, whether it basically revolves personal identifiable information, and essentially the threats that data getting into the wrong hands could pose, right? So having a very methodical approach of essentially saying, okay, look, how do we classify the data, right? And how do we then define what residency means? Is it within the borders of the specific country? Is it within a regional block, right? I mean, the DG talked about the various regional blocks that Tanzania, for instance, is part of. So is it within the borders of EAC? Is it within the borders of COMESA? Is it within the borders of the African Union, right? And then, like I mentioned, are we referring to data while it's in transit? Are we referring to data while it's in use? Are we referring to data while it's at rest, right? So those are, the elements of the discussion that has to be had with regards to data residency. And I think it's also important for us to also note that data residency, it's not necessarily a security issue, but more or less like a compliance issue, right? So the fact that it's residents within a particular border doesn't necessarily make it more secure, right? But it's just essentially, adhering to a compliance that's been put in place by the governing authority. The second aspect of it is also got to do with lawful access, right? So there's the US Cloud Act, where, essentially, hyperscale cloud providers that are, American companies have to essentially follow, the laws or the mandates of the United States government when it requires, access to some of this data, right? So there's the concerns, or legitimate concerns, that countries have about essentially working with, hyperscale providers such as Microsoft, AWS, Google Cloud Platform, around, their the more or less the overreaching arm of the US government into that data based on the fact that these companies, the hyperscale cloud providers, have to basically follow the US Cloud Act. So there is that true concern that we're definitely working to address, right? And I think there's a question we're going to basically address later on in terms of how we're essentially mitigating those risks or addressing those concerns. So there is, the concept of control, right? The countries that collect this data want to basically have control over that data and ensure that, there's no other government essentially having an overarching, or overreaching arm into that data. And then the last aspect of sovereignty claims that we hear that is of concern is also the concept of autarky. So autarky essentially refers to the ability of the systems to function in a case where, for instance, there is, some sort of a natural disaster that, for instance, disconnects the country from the rest of the internet. There could be, sanctions that could basically come into place that essentially forbids, countries from basically doing business with that other country. So they want to understand that, look, if there's a sanction that is in place, does that mean that, again, my citizens are essentially cut off from all the data that is stored in the cloud, right? And autarky also, there could be, some sort of a military operation or what have you, whatever states that, whatever condition that basically results within the country where, for instance, people are not able to get on the internet. You want to definitely ensure that access to critical services is not cut off as a result of that. So those are the three key pillars around which, we drive those conversations when it comes to data sovereignty. So that's data residency, lawful access, and also autarky, right? The ability to basically be independent of external actors or external influences when it comes to sensitive data. So talking about the global policy or global trends that we're seeing, and the latest information we have is about 76% of countries globally already have enacted, right, or essentially in the process of, ratifying policies regarding data protection, right? The EU with GDPR, right, certainly taking a leadership position in that, right? And then we also see that even within the African Union, I think in July 2014, the cybercrime and data protection regulation was ratified, right, or was basically developed, and it's been in the process of being ratified by member countries. Specifically, when I look at East Africa and the trends we're seeing in East Africa, there are 3 countries currently that have actually fully passed into law the data protection policy or data protection laws, right? And that's Uganda, and that's Kenya, and Rwanda. So, it's certainly a conversation that's been had, and I think across multiple countries in the East African region, we're seeing a lot of, a lot of activity in this space. There's a lot of engagement, and of course, there's a lot of collaboration that is basically happening across public and private sector as these policies are being developed and these laws are being formulated.
Thank you very much. I'll throw the next question to Dr. Nkundwe. Bringing this closer home to Tanzania, how is Tanzania now? Of course, you're working on the data protection bill. So how does all this relate to these global standards on data protection and privacy? Please.
Thank you very much. I've been involved in the drafting of that law, but in the angle of the technical person from the beginning. And when we did our research, we did a very thorough research of looking how data protection is all over the world. How is it drafted, the institutions which are managing it, and how it's supposed to interface with a global digital economy. Of course, when we talk about digital sovereignty, we are trying to make sure that data are being compliant with the laws of the country that the data was originating. But the fact is, the global digital economy doesn't have borders. We know that thing. But the critical issue here now, on why countries now they make sure that they have this kind of law, is because in the world of AI, the one with a lot of data normally will be the one that will be more powerful. And most of the country, they want to make sure that at least they have their data. It will be not good for many countries that if you have algorithms and your data there, maybe you don't have access. So personally, I think we need to have a global dialogue on how data can be, for example, a shared infrastructure, which is good for everyone in the world than the way things are. And then the cloud computing can be used as a tool to enable all people who have access to global infrastructure to be able to access those data. My colleague here said a very good thing that most of the countries, they look in a way of relating data with the sovereignty of a country. But personally, I think we need to have hello? Oh, yeah. Yeah, we need to have a common.
Cloud computing, if you follow it from, say, 2010 up to now, it's evolved so much. And it evolved from, for example, the infrastructure that was invested in make sure that we don't go into a cycle for every institution where we're safer, where we can share the connectivity with free. So now it's easier to put your data like this. But one thing we have not discussed is once the data are there, they belong to who? And words, laws, how is it going to be used? So where we go, we know that most of the time we'll be using AI. That is, there's no doubt about it. And we know that until that they have more data, they'll be superior than the country that they don't have. Initially, it was the country that they don't have computers, which is superior, but now it's data. So most of the countries they enact this law. Personally, I think data protection law has been named in the wrong way. Many people they talk about the protection part. The actual part is that the data empowerment law. Because it brings data to people that they produce those things. I look at the angle that data protection will enable, for example, a street vendor in Tanzania who doesn't have accounts with that. Maybe they have accounts in a mobile number. By data protection, if you are able there to access their data, which are related to mobile operators, and if those data are connected to banks, then they can get loans for their business. So data protection has an implication economically to ordinary people, and that's the angle that I'm looking at.
So I'll maybe just comment on the discussions, for instance, Estonia on the issue.
Well, there are, I mean, in the implementation part of the MOU between Tanzania and Estonia, their country, that we do in that respect. One thing that I know, having an act is one, but having systems which will enable every individual to know how their data is used, is accessed, that's crucial. And that country, they have a system where every citizen can access like the way we access email, and you know all your data that under how are they used, if the person who tries to access it, asking for permission to take that. If you want the bank to access it for calculation, how the loan is going to be paid, you are the one that have access it. So one takeaway that I get over there is once we pass the DGR Act, then we need to work with the system on how we can empower people to control their own data. That's one. Two, they have a concept which is called data embassy. This is something which is beneficial in a country level. Because because of the situation where the EU is now, the country, because they don't want to enter into politics, but the country is surviving because most of their data in the system they are residing in other countries. So data embassy is adding the resilience of the country, especially in terms of the system.
Thank you very much. So I'll go to once again the Microsoft is one of the so how do the solutions that we have? Speak to some of the stuff.
What's the transition related to the work we've done at Portugal?
Oh yeah. I say Microsoft is one of the global leaders in offering solutions around cloud computing, and as how do these solutions like address data protection, localization, sovereignty, and just also give examples based on what Microsoft has done.
So to kind of, like I said, from of the overarching principle we have as Microsoft with regards to data and privacy is that we fully and completely 100% handle data in accordance with the agreements we have with our customers. So in other words, the customer is fully empowered. They're the ones in control and in charge of their data. So that's that's an overarching policy we have as Microsoft. It's a well-defined and very established data privacy policies. That the data belongs to the customer, doesn't belong to us. We're just more or less custodians, right? If we decide to write instruction. And we basically make sure that that policy is consistently applied, not just with us directly as the hyperscale cloud provider, but also subcontractors or partners that provision these services for us downstream. Is that data belongs or is controlled by the customer, or the customer owns their data. So that's one thing that's very clear. Now, from a tech standpoint, just in terms of solutions and how we basically think about this, I'm going to go back to those three pillars that I earlier talked about, which is residency, lawful access, and audit. So with regards to residency, some of the things that we're doing at Microsoft essentially is to make sure that we're expanding. Our global expansion is very deliberate about providing a balanced geographical coverage of our hyperscale data centers across various countries in the world. Of course, we're not going to be in all the nations of the world, but we want to make sure that we're creating more or less like a regional maximum effect. That is, for instance, able to basically provide some sort of like a hub approach for instance, CONESA for the region, or for the SADC region, or the ECOWAS region, and things like that. That's how we basically look at it and say, okay, look, we might not be able to put infrastructure, hyperscale cloud infrastructure in every African continent, but we can target, for instance, the various regional blocks. So that's the kind of lens that we're looking at as we carefully and methodically about expansion. Which again brings me to the point I made earlier on about residency, is that residency doesn't necessarily have to be within the geographical borders of the country. It can be defined within regional cooperating blocks, right? It can be defined within the AU, for instance, within Africa, right? So so we think about expansion, in a sense that it's essentially harmonized across the various regional blocks. In addition to that, from a residency standpoint, we do also understand that there is a more or less like a hybrid set of offerings, right? So it's not just having the full public cloud, right, which is essentially the Azure public data center in country that matters, but we do have other form factors that essentially more or less provides a subset of the Microsoft cloud services in country, right, at a reduced footprint in that sense. Right, so to that effect, we have Azure Stack Hub, we have Azure Stack HCI. And so think of it as essentially, it's a subset of Microsoft's fully functioning cloud, right, in a data center that exists in the country. In Tanzania, for instance, we do have a fully functioning Azure Stack Hub, and essentially being operated by one of our partners, Liquid Telecom. In Kenya, we have the same. In Rwanda, we have Azure Stack Hub. In Nigeria, and in so many countries across Africa, we do have fully functioning, Azure Stack that essentially operates in those countries. Again, these are for countries that really do have very hard and fast laws or demands with regards to data residing within its geographical borders. So that addresses residency. The second thing around, lawful access, right? It's about telling people, how do we make sure that we're putting the tooling in place that essentially holds us accountable or makes us honest about the fact that data is basically being controlled or is in the hands of the people that generate it, right? So this is where technology such as confidential compute comes into place, and we announced that as part of the Microsoft Cloud for Sovereignty offerings that was recently announced just a couple of months ago. So this involves things like, customer lock boxes, creating things like, confidential VMs, virtual machines that can be created, right, with the keys to that essentially being controlled or being fully in the hands of the customer. So this further removes a company like Microsoft from, from the trusted chain in that sense. So essentially, more or less, puts the control 100% in the hands of the customer. Because you hold your keys, you have the keys essentially to that data. So whether it's, your data is being stored, whether it's within a virtual machine, when your data is basically essentially being used while data is in use, or while data is being, is in transit, that's why when it's applied, it's encrypted 100%, right? So when it's fully encrypted, Microsoft has no way of decrypting that data. No third party has a way of decrypting that data because the keys essentially in the hands of the user, the hands of the customer, right? And then author key essentially, then, like I mentioned, refers to the ability to continue to function even if you're cut off from the internet, or even if due to some sanction, a country can no longer do business with other countries. And essentially saying, okay, look, how do you basically still keep control of the development for that kind of situation? And solutions like Azure Stack Hub, for instance, can operate up to 6 months. Azure Stack Hub can actually operate, completely in a disconnected scenario, right? So where authentication and everything basically happens just locally on that, on that data center or that rack footprint, right? And then Azure Stack HCI, for instance, can basically continue to operate for up to 30 days without connection to the internet. So these are, again, solutions that we're, thinking about and methodically bringing to the fore as we, as we think about the need to basically balance, the sovereignty requirements of our customers and provide them, of course, with the comfort, the security of being able to basically get those transactions done in the cloud. Let's not be confused about it, right? It's in the digital economy. I kind of alluded to the fact that data is the oil in there, right? AI is the order of the day, being able to basically run this machine learning models, being able to basically create customized services. All of these things greatly enhances, right, the end user's experience. It greatly enhances the capabilities even of, small businesses and things like that. Of course, understanding that we're also within the modular convention, right? Specifically, we did some work, right, within the team to essentially create a modular implementation on Azure Stack, right? So we got it up and running on Azure Stack of Rwanda, as a matter of fact. So that deployment basically was, was piloted, or we did a POC in Rwanda to basically make sure that we're able to fully stand up, an Azure Stack of implementation of modular, right? So again, ensuring that we are able to, provide more or less like a one-click deploy experience for folks that will need to, for instance, maybe create some sort of a sandbox in a particular country where they start up and basically get that up and running without essentially requiring, access to the hyperscaler. So again, I'm just saying that technology exists to basically make that happen. We continue to make strides towards it. We understand it's a very important requirement, right? And certainly making sure that we're working and being sensitive to the needs of our customers.
And for the time also, maybe just
yeah, because of time. We were to have a private sector representatives. We had invited private sector to be here, but unfortunately they couldn't make it. But I'll still pose the same question. Yesterday we were talking about all of the benefits to the private sector. Of course, the whole issue about the need to back up data on cloud for a lot of these companies and such, but maybe you could start. Dr. Kudus mentioned some of these key benefits to either private. I know we've spoken a lot about the public sector, but a little bit, what would adoption of these global standards mean, especially for the private sector, and what's the way forward for Tanzania in this? And yeah, after this, I think the next question will be about.
Well, when you look at the landscape of our SMEs in Tanzania, we have around 3 million SMEs, and we are embarking on a plan to digitize them. There's a digital transformation of the SMEs. So surely we are not looking at all SMEs to have their own servers. So cloud computing is needed, and all these standards will empower them to be able to use their data that they're generating every time, and also to be able to share, apply AI, and making sure that they do business in a proper way, how things are supposed to be. So to adhere to global standard is a way to go, and that's the direction that we are looking at, because we know the global digital economy doesn't have boundaries. and we need to be part of it. We can be part of it when we create our own standards which are not compatible with the standard of the world.
Thanks. Maybe final All right, cool. So parting shot, look, I mean, I think I'm just going to build up on what the DG has said earlier, right, which is around the fact that there needs to be a lot of harmonization and collaboration that happens across countries as these laws have been formulated, right? I mean, it's a good thing that, at least the three countries in East Africa that have already passed laws, so the Kenya, Uganda, Rwanda, are largely builds off of the EU's GDPR, right? But I think there needs to be a harmonization or a consistency across, various countries, especially with regards to these policies, so that it essentially makes collaboration, right, or again, cross-border data flows, something that is essentially aided and not hampered by the policies that are put in place. And again, apart from countries collaborating amongst each other, I think there's also, of course, very great need for private and public sector collaboration in the formulation of these. And that's why we as a company will continue to basically work with governments, and we'll make ourselves available to them, to essentially provide, inputs and policy guidance as, a lot of these laws have been formulated.
Yeah, thank you so much. So on that note, I think we conclude this, a lot of private, the public partnership, a lot of collaboration between the different players. Thank you very much. We have to end it there because of time. Thank you.